Good morning, everyone. I usually don't post videos and I usually never talk about the Bank of Canada rate announcements just because every realtor and every broker out there posts about it and tell you all the news before I even get on there to talk about it, so it makes no sense. But this time I had to make a video. And the main reason why is because, there's some people out there that are saying that they expected more leadership from the Bank of Canada. And while I'm not the biggest fan of the Bank of Canada's governor and the decisions that have been made in the past, especially with rate increases and the decisions on policy, I have to speak up this time and say, like, this is really an unfounded statement to be making at this time because really we're in a situation of a lot of turmoil, a lot of you know confusion, a lot of ambiguity as to what's going to be happening with the economy, with tariffs, with our trade, and with consumer confidence. And I'm not surprised that the Bank of Canada did not make any changes because going into the holiday season is not the time to try to spur on more spending than we should because of the fact that we can actually now overshoot our inflation target, and inflation could skyrocket, leading to very quick rate increases, undoing any changes they make now. So I think it's a prudent decision for the Bank of Canada not to make a change this month, namely today, and wait to see what happens with the consumer spending over the holidays. In the new year, the consumer spending for leading up to Christmas is going to come out. And those statistics, right, are a lead indicator of the economy going into the new year because the spending during Christmas is a indicator of consumer confidence in the economy. What do I mean by that? Well, the more people spend, the more they are confident in their financial situation, which then translates to confidence in the economy. The less they spend, then the correlation is true going the other direction. The less confident they feel in the economy, the less confident they feel that the spending that they've made will be recuperated and they can continue to boost their savings on the other side of things. So it's better for the Bank of Canada to, again, do exactly what they did, hold rates now, wait to see what those spending numbers look like, and determine if it's going to be prudent to now stimulate the economy, or if the economy is growing at the pace that they're satisfied with for the time being. There are comments being made about not dropping is gonna hurt the economy. It's going to hurt people's ability to afford homes. Now, first of all, let's get this clear. Contrary to every news reporter out there and numerous realtors and numerous brokers, changes to the Bank of Canada's overnight lending rate does not impact fixed rates. Fixed rates are impacted by the bond rates, the long-term bond rates to be specific. So when you have a change in the Bank of Canada's overnight lending rate, what it can impact, it doesn't have to impact, it can impact the banks, so each bank's prime lending rate. Banks can choose to lower their prime or raise their prime accordingly with the Bank of Canada, or they can choose not to, or they can choose to lower it or increase it at a different amount than the change from the Bank of Canada. So for example, if the Bank of Canada drops their overnight lending rate by 0.25%, okay, so 25 basis points, a bank could choose to only lower their prime rate by 0.15, and we've seen that happen in the past. So it does not necessarily correlate a direct correlation for Bank of Canada rate changes to prime rate changes. It does not necessarily have to be the case. And it also does not have to be the case that there's any changes at all, and it definitely isn't the case that it impacts fixed rates. So I think this is really important for everyone to understand, because you're not going to just stimulate the housing market just because there is a change in the lending rate by the Bank of Canada. It is a contributing factor, but it is not the only factor, right? It does affect people's affordability on their borrowing costs for items that are variable rate borrowing costs. So potentially car loans, lines of credits for sure. Maybe some credit cards that have a variable rate option. Their mortgage perhaps if they're taking a variable, but not, again, as I mentioned there, not necessarily. So a lot of these statements that are being made are ill-founded and based on lack of knowledge or lack of understanding of how these things work and how these factors play into it. Yes, if the more decreases that we have, it will help boost confidence. It will have a multiplier effect in the economy, and this will eventually lead to more purchase of homes and more engagement in the real estate market. But it does not impact it just because of one single change, and not by the degree that a lot of people are saying would have happened had this rate announcement been a decrease instead of a hold position by the Bank of Canada. I hope that helps explains it for you. And of course, if anyone wants to find out more information about this or want to talk about, or even give me a contrary opinion, give me a shout. My number is 905-391-9979, or you can reach me via email at sadiq@approvedfinancial.ca. My name is Sadiq Boudou. I'm a mortgage broker and principal broker of Approved Financial Services in the Durham region. Have a great day.